We're looking at a weekly chart of the price movement in Apple stock over the past 3 years. And notice in the lower left of the chart, the low for this time period was $108.25, and we're currently at the all-time high, which is on the upper right of the chart, where we've hit $267.43. So if you were a buyer back in 2017 and you paid, let's say, $110 a share, you spent $11,000 and your stock would now be worth $26,700. But the question is, could you have sat through all of the ups and downs of the stock? And as I look at the picture, during 2017 and 2018, the price of the stock just seemed to move higher and grind higher in a reasonably organized fashion. But then when we got over to October 2018, then we started to have a little issue. And if you look at how far it dropped from about 230 a share in October down to roughly 150, that was an 80-point drop. So if you had 100 shares of Apple stock, you would have had some good gains if you bought it back at 110. But the amount that you would have given back would have been $8,000 for your 100 shares because it dropped 80 points. And for some people, that's no big deal. They could say, hey, I'm buying the stock for the long haul. I think Apple's just going to go up and keep going up. It's going to eventually go to 1,000. So buying it and holding it, I have no problem just hanging on to it for years, and it's just going to make me money year after year. And that very well may be the case. We just don't know. But there are plenty of stocks that were high flying, and all of a sudden, things changed. So let's look at a few of them. If I looked at the stock General Electric. General Electric was up at $32 a share back in the beginning of 2017, and it's been cut pretty much in three. It hit a low of between $6 and $7 a share at the beginning of 2019. So over a 2-year period, it lost 3/4 of its value, and now it's been catching up a little bit where maybe it's bouncing or maybe it's looking to rally and work its way back up. Let's look at a couple other popular symbols. Here's Macy's. Macy's was as high as $40 to $45 a couple different times during the past 3 years. Over here, it was at $45 a share back in 2017. And over here, back in the middle of 2018, we were up at $40 again, after pulling all the way back down to about $20 or even lower. So it was a pretty good recovery, but now Macy's again has worked its way all the way back down. And right now it sits at about $16 a share. So when you're in the period where the stock is doing nothing but moving higher, like from October of 2017 through July of 2018, it looks very much like an Apple picture where it just looks like it wants to go to the moon and keep going. And then something changes. Look at a stock like Netflix. Netflix, over the 3-year period, was down as low as 113 and as high as 423. So it tripled in value, or almost 3 to 4 times the value of where it was in 2017. And it did that in only about a year and a half. But right now, it's given back over $100 a share. And now that there's other companies that are competing with Netflix, what if the new Disney comes out and has a better deal and gets more popular than Netflix did? Could Netflix fall by the wayside just like Blockbuster did from the video rental days? So even though Netflix looked from 2017 through halfway through 2018, it looked just as good as the Apple chart, now things have changed. So why would you want to protect your stock? Because you never know. So in the next video, we're going to start by showing you how to use options to protect your stock position by just buying a long put, which will manage your risk to a level that perhaps will make you be much more comfortable to hold the position over a long period of time.